The Basics of Cryptocurrency, a Beginner's Guide. Hi there, it's Luigi and welcome to Catapult Capitalism, your guide in making smart financial moves for your future. Today we'll be talking about the basics of cryptocurrency. What is it? How does it work and its main premises? If you're into this kind of content, smash that like button, subscribe to the channel, and click that bell notification icon so you're notified when we upload a new video. Alright, let's get started. Cryptocurrency is known by many different names. You've probably heard of the most well-known cryptocurrency types, such as Bitcoin. And maybe for some of you, these terms are completely new and very technical, especially to someone who's not that inclined to the ever-changing and innovating digital world. So to help you guys, here's a video especially made for you. Hopefully, it'll help you in understanding what cryptocurrencies are, the risks involved, and how to protect your money. A cryptocurrency is a digital money that uses encryption techniques to establish an alternative form of payment. Because of the use of encryption technology, cryptocurrencies may be used as both a money and a virtual accounting system. Cryptocurrency is a digital asset, to put it simply. The term comes from the fact that all of its transactions are fully encrypted, ensuring that the transactions are safe. It's a peer-to-peer system that allows anybody to make and receive money from anywhere. Rather than carrying physical money anywhere in the real world, you can use cryptocurrency payments. How does cryptocurrency work? A public ledger called blockchain runs cryptocurrency. Blockchain is a record of all transactions held by and is being updated by currency holders. Cryptocurrency is made through a process called mining, which is when powerful computers solve very difficult problems. It usually happens as a reward for making cryptocurrency transactions that go well. In other words, when people trade cryptocurrency, they often bring more cryptocurrency into the world. Sound very technical so far? No worries, once you master the field, you'll be able to let the digital world do the work for you. But first, you have to deal with the terms and experience firsthand what cryptocurrency is all about. Also, as mentioned earlier, you've probably heard about Bitcoin, the most popular cryptocurrency. It was founded in 2009 by Satoshi Nakamoto, widely thought to be a pseudonym of someone or some group of people whose identity remained confidential. To give you an overview, here are some of the best-known cryptocurrencies. Besides Bitcoin, there's also Ethereum, Litecoin, Ripple, and a lot more. Buying and storing cryptocurrency. First and foremost, you should have a platform of your choice to be used in buying cryptocurrency. One option is traditional brokers. Basically, these are people who buy and sell cryptocurrency as well as other types of money, like stocks, bonds, and ETFs. In general, these platforms have lower fees for trading, but not many crypto options. Apart from traditional brokers, you may also opt to cryptocurrency exchanges. This gives you a wider range of offers. When trying to compare different platforms, think about which cryptocurrencies are available, how much they charge, how safe they are, how easy it is to store and withdraw your money, and other stuff like that. Once you've chosen your platform, the next phase is to fund your account, so you can start trading right away. Fees are an important thing to think about. These include possible fees for deposit and withdrawal transactions, as well as fees for trading. Fees for each payment method and platform will be different, which is something to look into at the start. Then finally, you can place your order. After you buy cryptocurrency, you have to keep it in a safe place to make sure it doesn't get hacked or stolen. Most of the time, cryptocurrency is stored in crypto wallets, which are devices or software that keep your private keys safe. Some exchanges offer wallet services, which make it easy for you to store your money right on the platform. If you're still here and you feel like you're learning a lot, make sure you smash that like button, subscribe to the channel, and click that bell notification icon. This way you'll be notified every time we upload a new video. Okay, let's get back to it. Is cryptocurrency safe? Blockchain technology is usually used to make cryptocurrencies. Blocks are used to record transactions, and each block is time-stamped. This is called a blockchain. If you do this, you get a blockchain system of cryptocurrency transactions that is hard for hackers to change. In addition, two-factor authentication is required for all transactions as well. Among other things, you might be asked to put in your login details to start a transaction, or a verification code might also be sent to your registered mobile numbers. But it doesn't mean that cryptocurrency can't be hacked, even though there are security measures in place at the same time. Many high-dollar hacks have cost cryptocurrency startups a lot of money. Because virtual currencies aren't backed by the government, they don't have a fixed value. This can lead to wild swings that make investors very rich or very poor. It also doesn't protect cryptocurrency investments as much as traditional investments. What are the possible risks? Use of cryptocurrency comes with a lot of risks. A lot of people don't know much about cryptocurrencies yet, and the market is very risky. Because cryptocurrencies are not affiliated with banks or third parties to keep them safe, they tend to be uninsured. Plus, it's hard to turn it into real money. They are technology-based intangible assets, which means they can be hacked just like any other technology-based intangible asset. One more thing. Because you store your cryptos in an online wallet, if you lose your wallet, or the passwords for it, or the backups for it, you will have lost all the cryptos that you bought. So how are you going to protect your cryptocurrencies? First, before you do anything, research and investigate. Before you buy a cryptocurrency, make sure you know how it works, how to use it, and how to exchange it. Take a look at websites for currencies like Ethereum or Bitcoin so you can fully understand how they work. You should also read separate articles about the cryptocurrencies you're considering. Now this. You wouldn't put $1 million in a paper bag, right? So don't put your cryptocurrency in an unknown or less known wallet to keep it safe. A good wallet is very important. Take note. Have a backup plan. Make sure you think about what would happen if your computer, smartphone, or any other place where you keep your wallet was lost, stolen, or you didn't have access to it at all. A backup plan is important because if you don't have one, you won't be able to get your cryptocurrency back, and you might lose your money. So to end this video, with cryptocurrency, the future is here indeed. There might be obstacles and risks, but that's normal, especially when taking big or major investments with the hopes of achieving financial freedom. Depending on your level of confidence and commitment in the process, you just might be successful. I hope you found this video helpful. If you did, hit that like button, subscribe to the channel, and click that bell notification icon so you're updated when we upload new videos. Once again, this is Catapult Capitalism. Thank you so much, and we'll see you next time.